Okay, everybody, it is me, Gregory Mannarino. Remember this date, Wednesday, September 28th, 2022. Why is this date so important, people? You probably know already. I'm laughing. I can't help myself. If you're paying any attention, any at all, to the mainstream propaganda ministry, I'm talking about Bloomberg, Fox Business, CNBC, there's one topic that is being plastered across their screens. And what is it? Well, the Bank of England has now capitulated and has restarted quantitative easing. Let me read this to you. The Bank of England intervenes in the bond market after massive sell-off, citing instability in the credit/debt markets here. You and I have known about this. We've been talking about this for weeks now. And look, I've admitted that I have been wrong. I expected that central banks were going to do this sooner than later, but they're doing it now. Now, let me explain this to you. Being that now the Bank of England has capitulated and has restarted quantitative easing, what are other central banks going to do? In my view, they're going to follow suit. Now, here's the deal. Look at the U.S. 10-year yield this morning. It came down. Well, that is a little bit, I'm not saying it's going to work, but it's a little bit of a sigh of relief here. The debt market seems to now maybe be pricing in some kind of intervention, which the Bank of England just did, in the debt markets. People, look, nobody knows this better than you do, because I've been screaming from rooftops about this for weeks. Instability in the debt market is, it's humongous. It's huge, and it will. If this continues, and I have been saying this repeatedly, if central banks don't do something, this was it. Party over. Implosion moment. Well, the Bank of England obviously agrees with me and you. And now they're in here instituting a new round of quantitative easing. Now, this is pretty interesting. So, Bloomberg this morning, they had a guest on. And the guest said that this move by the Bank of England proves that central banks still remain, are you ready, in la-la land. That's what he said. I mean, that's kind of what I use all the time, la-la land. It's amazing. And it's just, look, it's amazing here. But it gets even better than that. So Janet Yellen, former Fed chair, current U.S. Treasury Secretary, she had this to say: the financial markets are operating normally. So Janet, since we're such close friends here, Janet, maybe you want to explain to everyone, if everything is just so normal, why, tell me, all of us, why the Bank of England just restarted quantitative easing and is citing instability in the debt market. Duh! People, let me ask you a question seriously. Is she going to be held to account here? No. Again, these people cannot ever tell the truth. Look, when they say one thing like that, like Yellen now is saying that the financial markets are operating normally, that means they're obviously not. The polar opposite is always true. You can't make this stuff up. It's impossible to do. Anyway, this is huge, this news here with the Bank of England. Look this up for yourself here. But the bottom line is there's capitulation here in a central bank, and more than likely other central banks are going to follow suit. Now, if in fact this does happen, you should expect some stability in the debt market. If we do not see that, if we see, for example, today, the 10-year yield get above 4% or higher, then you know that the market doesn't buy it, and you will see the phenomenon of the U.S. dollar relative strength continue to go higher, and you will see the stock market get hit. Look, this issue here, look, why am I so happy and giddy this morning? I'm going to tell you right now, because it's finally getting some attention. Look, You know how this works. You turn on any of the mainstream propaganda ministry financial channels. It's always about the Dow Jones Industrial Average. Look at the Dow. Look at the Dow Jones Industrial Average. No, it's the debt market, which is the driver. And now you knew this already, but now at least you're starting to hear from even the mainstream how, hold on a minute here, look at what's going on. Global markets sell off here in bonds, driving rates higher at an uncontrolled pace. And this is just ugly across the board. And again, it's not just about what it's going to do to the stock market. People, look, I always tell you this, like the stock market's going to do its thing based upon action here in the debt market, but it goes way, way, way beyond that. This is a human life issue. This is an existence issue here. The debt market hyperbubble is a monster. It's a literal monster which has the world in its crushing hands right now, and an implosion in the debt market will lead to, forget about supply chain disruptions. We're talking about a resource problem on a biblical level, a biblical scale. And this is going to cause the human race, a lot of it, to die off. The hyperbubble in debt has risen like a freaking hockey stick along with the global population. What happens when the debt bubble bursts? The population is going to die off. No one is going to tell you this. No mummified Frankenstein presidents, Fed chair people, nobody. But it's the truth, people. It should make sense to you. This hyperbubble in debt has created a human bubble. And it's going to be a terrible price to pay for this. A terrible, terrible price. And don't for a nanosecond believe this is by accident. I know you don't. Anyway, they need the largest possible outcry they can get to issue in their new system, a one world government, which we already have, being run by central banks. Period. A whole new system, a new set of rules, a new paradigm. I've been telling you this for years. Anyway, on the investor front here, so we just found this out. This is interesting. No surprise. So investor pessimism now jumps to its highest level since the last meltdown of the stock market in 2008. I think that's pretty epic. I really do. But look, all the stuff that you and I have spoken about for years, people, it's in our freaking face now. It's happening. It's right here. And this capitulation here by the Bank of England, it's tremendous. It's in my view, this is tremendous. But we're going to have to see if it actually works. So this morning, like I said, 10-year yield came down a little bit. Dollar strength is still slightly up. We're going to be able to tell today, okay, if this capitulation here, this restart of quantitative easing by the Bank of England is going to do anything to stabilize the debt market. Watch the MMRI, Mannarino Market Risk Indicator, link in the description of the video. Watch the U.S. 10-year yield and the U.S. dollar here. So we have a few things to keep our eyes on. I will keep all of you well informed as to what is actually going on. Let's move on forward here. So on the back of this information, this big news, the biggest news I've heard in a while with regard to the Bank of England here, U.S. stock futures are relatively flat. The last time I looked at them, they were slightly in the red. Bitcoin hovering around 19,000. Gold and silver relatively flat. Crude oil catching a bid here a little bit. That's where we are. That's where we stand. But I want to hear from you. What's your take on this? Look, I have been saying for many weeks now that I believed that central banks were going to intervene. They were going to do something. They had to. Or they were going to allow this thing to implode. The fact of the matter is, Bank of England has now taken action. They blinked, and now they're going to be reinstituting quantitative easing. Do you believe other central banks are going to follow suit? Or do you believe this is the moment where central banks are going to just allow everything to implode because they have lost control? Which is eventually going to happen. We all know that. We know the end game. The end game is a complete, total meltdown of the financial system and the global economy along with it here. I just wanted to mention one more thing here. So Fed President Mary Daly, another one here who is kind of gender confused. At least she looks like that to me. It looks like that to me. She completely went against her boss. This is what she's saying. The Federal Reserve does not want to tip the U.S. economy into a downturn. Now, what can we interpret here? Okay, when a Fed president says something like that, the polar opposite is true. Jay Powell himself, Yellowstone, the Fed chairperson, explained to you that economic pain is coming. Okay, and the Federal Reserve is going to drive that. Again, look, what is this all about? You understand this? They're bringing the world, central banks are bringing the world economy to its knees by design to implode the system, wipe out the financial system, bring about the greatest outcry the world has ever seen, okay, to institute more control, to institute a new system. A coordinated effort by central banks is well underway to make this happen. And this little thing today, or this big thing by the Bank of England, restarting quantitative easing, it's only temporary, of course, only temporary, until they're ready. And I've been telling you, I don't think they're ready yet. I don't think central banks are done acquiring assets. Imagine their power. Central banks have the ability to create cash out of thin air and do anything they want with it. They can buy assets. They can inflate off of the back of that. They can deliberately create inflation. How is it, let me ask you, that private organizations run the entire global economy and the entire global financial system? How did we, the people, allow that to happen and continue to allow that to happen? Maybe you want to answer that question too. This guy here loves you a lot. People, I will see you at the end of the day. And, ponder these things. I'm out here.